Hello and welcome to Finextra. I'm Josie Waite and I'm here with Andrew Davies from Fiserv. Thank you for joining me, Andrew.
You're welcome.
The global payments landscape is going through huge transformation. What financial crime risks are there for financial institutions?
So the transformation we're seeing globally offers consumers of financial services, greater speed, greater convenience of payments. But with that greater speed and with that increased convenience with frictionless payments, there is an increase in the potential for fraud risk. So fraudsters can take over credentials of consumers of financial services. There can be malicious software, spear phishing attacks. All of these type of techniques are being used to steal funds from the consumers themselves and from financial institutions. What we need to do is make sure that the cadence of the risk mitigation that we've deployed, the implementation of real-time fraud detection systems is consistent with that payment transformation to protect the integrity of the financial system itself and the consumers of financial services.
How can financial institutions leverage investment from financial crime risk management and derive value from it?
So the number one reason why consumers of financial services do not adopt new payment services is a concern about security. So the first thing financial institutions can do is ensure that their financial services that they're offering are secure. Now, of course, when you're monitoring transactions and activity for financial crime, you're building up a profile and understanding of your customer behavior. That customer behavior can be leveraged for additional value to understand what products are most suitable in certain regions, what products are most attractive to consumers in particular areas. Also, the global revenues that financial institutions derive from payments amount to around 25% of revenues of financial institutions globally. Protecting those revenues from fraudsters and also from new providers of payment services is critical to financial institutions going forward. So that's just a couple of examples of the type of value that you can derive from deploying effective risk mitigation tools for fraud.
What are the key trends in financial crime risk management?
So current trends that we see, we have around 1,200 customers globally that we talk to on a daily basis to understand the threats that they're seeing. Things like bank email compromises, CEO fraud, spear phishing, so looking at high net worth individuals or CEOs of companies and hijacking their credentials and using their credentials to initiate fraudulent transactions. We're seeing that on a grand scale. We also see greater penetration internationally, so people sending out international transactions that are fraudulent. These are some of the trends that we're currently seeing, and they can be addressed through the use of technology and process and procedures. In the United States at the moment, the FBI have introduced, actually I think they introduced it last year, a process that they call the financial fraud kill chain. So it's a process that you need to go through when you're subject or one of your customers is subject to fraud. So we're seeing obviously increased fraud levels and fraud attempts, but we're seeing processes and procedures and technology being deployed to mitigate that fraud.
Impact can an effective risk management have on payment processing products and services?
So firstly, we can protect financial institutions and consumers of financial services from financial crime, so reducing fraud losses. And then secondly, security can be a differentiator for financial institutions. So the number one reason why consumers of financial services do not adopt new innovative payment products is a concern about security. So that differentiation using the appropriate security mechanism can be really a second line of benefit in deploying financial crime solutions.
Thank you, Andrew.
You're welcome. Thank you.
And thank you for watching.